my friends, welcome. This is Market Commentary with Axiory. Yesterday we had interest rate decision from Fed. As expected, we got 25 basis points rise. It was 11th time that Fed increased rates in 17 months. We reached 5.5%. But inflation is going lower in the United States, and the main outcome was that they are rising rates not because of the inflation. I mean, of course, that's also a reason, but the main reason is that economic development, like economy is just too strong, right? Americans keep spending money, borrowing money, traveling, going to shops, spending money, and all that. So rising rates is to cool down the economy, because when economy is rising too fast, it's also very dangerous. So that was the main reason behind this rise. Today we are also expecting an interest rate decision. We will have interest rate decision, but we are expecting a rise, 25 basis points, but this time from the European Central Bank. Recently, European Central Bank, since July last year, increased rates by 400 basis points, which is the fastest tightening cycle on the record. So we can see that the problem in Europe, in Eurozone, is that in all those countries that are in Eurozone, inflation is not the same. So in Baltic countries, inflation is 2-digit. In other countries in the West, it's already in the target of 2%. So it's really hard to manage all those economies, economic development in Germany is going lower, GDP is falling down, but Baltic states are expanding extremely fast. So you can see that Eurozone is very uneven. So this is what we are expecting, and let's look on the indices and on euro-dollar, because euro-dollar was affected yesterday by the interest rate decision from Fed, and will be affected today by the decision from Eurozone. The big picture in the euro-dollar, you can see on the weekly chart, is that we had this bullish correction here, and this one here, and this one is precisely the same as the previous one in terms of the depth, in terms of the number of pips. And most recently, this upswing touched 61.8 Fibonacci. So that was an extremely strong resistance. So no surprise that after touching this resistance here, the price dropped to 150 pips. But interest rate decision from the US and the statement was negative for the dollar, so now dollar is losing, so euro is gaining traction. So you can see euro dollar is climbing higher. Here we do have this resistance area, resistance was tested as a support. If the action from European Central Bank press conference will be perceived as hawkish, we should get a strong upswing towards 61.8 Fibonacci. Now let's look on the situation on the indices, European and American. First, let me start with Nasdaq, which beautifully bounced off this long-term uptrend line. So on Nasdaq, we do have a strong buy signal. We do have this buy signal on other American indices as well. You can see that S&P 500 is currently making new midterm highs. In anticipation for the decision in Europe, DAX is also climbing higher. You can see monthly highs on DAX. Technically, that's a false breakout of the neckline of the head and shoulders pattern. False breakouts are usually strong false breakouts to the downside are strong buy signals, and that's the situation here, from monthly lows to monthly highs, and there is a buy signal on DAX ahead of the ECB rate decision. Thanks very much for watching, and I wish you all the best in your trading.